All right, welcome back, guys. Let's start another video. We'll just wait for everybody to come in. All right, give it a few more minutes. Unfortunately, I can't cut this part out for some reason. Again, I'm not very savvy with this YouTube live streaming thing. It's my new toy. Still learning a lot from it. So just bear with me a little bit. All right, couple. Just give me a minute or two. Make sure everybody comes in. Good morning, sir. Buongiorno. ¿Cómo estáis? أهلا وسهلا. Nope, no, 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 no. Go away. All right. All righty. All right. So let's get started. So what's going on in the markets? Well, we are forming the right side of an M pattern. We have a full structure now. Okay. This is a channel that is pointing to the upside. We had a head and shoulders. We made the pullback yesterday. This is enough of a hook to define the structure. 3 waves, 4 points, and we are now looking for price to resolve to the downside. Now, is this line going to hold? We don't know. It needs to be tested. So, uh, the question we asked yesterday, what's the market trying to do? Right? It was trying to bottom right in here. This is where we were saying that this is trying to bottom, and it did a good job. Okay, it continued to go higher. These are important questions to always ask yourself when you're looking at a chart, right? What's it trying to do, and how good of a job is it doing it? So we've ended up now in this structure, which is bearish, right? You can't argue with that. You have your 3 points. Okay, well defined. You got your 3 waves, your 4 points, and now it's pointing to the upside. So the next move should be to the downside. Okay. Now, what is the target? My target area. Well, my target area is the bottom of this trend line. I think probably by today we will test it. Okay. Now, if that should happen, well, we're going to end up with another we're going to end up with another descending resistance area. So going into next week, okay, we'll look for some kind of a consolidation and see how it works. If it continues in this manner, look for one more wave up. If that were to happen, then the resistance here is no longer valid, obviously, right? So we don't worry about this anymore. Um, but it's going to be interesting to see how it's going to develop. If it fails, if it fails at that one more up, okay, so you get something like this, it comes up and fails, well then you can look for the bigger down move. All right, and that would be a doozy. So, again, a lot of projecting. You need to wait for the data to tell you what is going on, what is like. I'm just giving you a likely. I'm not going in trading thinking like this. Okay, that's not your job. Your job is to find good risk rewards, and the good risk reward right now, okay, is that this structure is going to break. All right, and if it breaks, you can take it to the short side down to, whatever this is, my target area, 11,753. All right. So that's right for right now, for the last hour and 40 minutes. Now, if you remember 2 days ago, this occurred in the last 2 minutes of trade, so be patient. Now, here's another question, right, that you can ask yourself. What was this trying to do, right? What was this trying to do? Well, it was trying to push to the upside, okay? How good of a job did it do? Not very. Not very. So that's a clue, right? These are subtle clues. And I think with these two questions, what's it trying to do? How good of a job is it doing it? I think it's really going to help you um, make better decisions as to when to take trades. Okay. This all started, if you remember, from last week. A few days ago, when we said, okay, we have a head and shoulders. It broke, and I said, take quick profits. Came back up, broke again. All right, take the short. Came down, all right, start at the bottom. We talked about that in the previous videos. It looks like I have fucking Parkinson's. I got a cold. Ah, fuck. Okay, and then we said, okay, what is it doing here? Well, it's trying to bottom. Okay, sure enough, it bottomed, it went up. And now what is it doing? Well, not doing a very good job pushing higher. All right. So the next move we're looking for is to the downside. All right. So that's the Nasdaq. S&P 500, we talked about the limp tick yesterday, and then it popped, right? But it's not doing a very good job pushing higher, clearly, right? So you have this uptrend again, and we can measure this as well. Remember, take the lowest point. Okay, there it is, 1, 2, 3 up, structure going up, went to a limp tick, it bounced right off of this area. I'll take it off. Let's take all this stuff off. Okay, so the burden of proof is what, right? The burden of proof is on the bulls. They must at least maintain a trajectory that is above this bottom trend line. So if this were to break out, and it tried, it didn't do a very good job. Okay, if this were to break out, then you get one more up. But it's not doing a very good job. It failed. All right. So what's the alternative? Well, if it breaks here, okay, again, we end up in a what? A right shoulder. All right, a right shoulder. A right shoulder. Fuck. A right. I'm looking at the head and shoulders. We end up in an M pattern again, right? Now, remember that these setups only come a few times a year. They don't come every single day. where something on a small time frame has big implication on a bigger time frame. Okay, and it's important to remember that. It's important to always, when you do an analysis in a small time frame, maybe a couple weeks or whatever, that you always keep your focus on the bigger time frames and what this means. And this is one of the few times where the small time frame is really going to have an impact on the bigger time frames. Okay. All right. So the resistance area on the move up is going to be this trend line, right? It's going to be up here, and then that could possibly fail. All right. So the message of the market right now is that we're going for that right M pattern because it's not doing a very good job pushing to the upside. Now, a tweet can come out, a vaccine tweet can come out, a Trump tweet, whatever. Small time frames have these problems, so you gotta wait. You gotta wait. But that's what's setting up right now. Small caps, back into structure. Typically, this should resolve to the downside, right? If you break the bottom, you're gonna break the top. Break the bottom, break the top. Not doing a very good job of doing that. There's no follow through. Okay. Let's take a look at the market leaders, the fangs. Okay. Breaking down. So now this will become the resistance area. Just set it up. Okay. So thrust, flag. So we could get one more up. Transportation coming down. Okay. Broke yesterday, confirmed today. Uh, it's a bear flag, right? Obviously. I'll just put it in there. Okay. Let me take this out. It's pointing up. The next move should be down. Let's take a look at the equal weighted S&P. And as you can see, it's doing far better um, than the normal S&P. Okay. What is that telling you? It's telling you the money is shifting from the market leaders to utilities, finance, other areas uh, of the index. Okay. How about the dividends? Same thing. Okay. Is the money's being the purchasing is redistributed. How about the VIX? Right, right back down. Right. We needed to see follow through. There was no follow through. So not doing a very good job. New York Stock Exchange Composite Index, same story. Okay, drop, pop, drop, pop. So this is not based on market leaders. That's typically bearish. Okay, that's defensive. That's the way I would look at it. World Stock Market Index, same. Okay, but we are looking for that right M pattern. Okay, airlines in the middle of nowhere within this bear structure. These are the the most affected, I would say, representatives of each industry stocks. Okay, so it's Hilton, Diana Shipping, which is dry shipping. Um, it's Avis, Delta Airlines, Royal Caribbean, and Tsakos Energy, which is oil transportation by sea. Okay, tankers. So this index is showing us just more sideways movement. Right? There's not a whole hell of a lot of excitement. Typically, when the market does bottom, these will outperform the rest of the market because they've been beaten up so bad, so bad. China, China, the China virus. Bull flag, okay, broke to the upside, not doing a very good job as of now. Okay, popped up, came back down, still in this sideways bull flag. And how do we know this is a bull flag? Well, you look at the compass. Okay, compass is showing up, so it should resolve to the upside. Right? And it's a structure above a structure. Just right now, not doing a very good job. Emerging markets, okay, not doing a very good job. Japan, manipulated stock market. We'll skip this. Australian dollar, the same deal. Nifty 50, okay, it's trying to hold on there. I could make an argument this is bearish. Okay, didn't do a good job to go back into structure of the bear flag. All right, so the next move on this one should be lower. All right, Cosby, again, going back and forth within this uh, bull flag in the middle of nowhere. Okay, so nothing there. Europe, big drop, big pop, just all over the place. Clearly, the move was lower, right? Again, it's in the middle of nowhere. Nothing bullish about that. Germany, big drop, big pop. Okay, so this too resulted to the downside as it should. Let's see how much this pops. But you look at the data coming out of Europe in terms of coronavirus. Fuck, you know, it's like worse than before. Worse. That's Greece is worse than before. Germany looks like shit. You know, I don't know. I think again that we are getting into this fatigue phase where everybody's just tired. Savings are starting to dwindle. Businesses are lost. Jobs are lost. Okay, people moving out of big cities, right, to wherever they came from. Rents are coming down, right? These are all fundamental big problems. And the longer this lasts, as I've said in the beginning, the longer this lasts, the worse it's going to be. And I think we're starting to get into that phase, right? We're getting into the flu season. Hospitalizations are going to start to rise. Deaths are going to start to rise. How long is it going to be before this starts to impact the market? I mean, you can never know that, right? You can never. That's why we look at the charts, right? You take the macroeconomic data, you compare that with the charts, and you see what happens. Now, the problem is obviously that we keep getting this manipulation from governments, right? Pumping trillions. That's going to affect price. So you get this distortion. There's no price discovery. There's no, you can't really read the data in the same way if there was not this manipulation. You can't print 25% of GDP in 4 months and say, well, no, this is not manipulated. Well, how can it not be? That money's got to go somewhere. It's got to flow. It's water. It's got to go somewhere. So I don't know. UK popped in the middle of nowhere. Uh, Here is Taiwan, right? Not doing a good job bouncing, right? That's for sure. Okay, so this break test go that we were talking about yesterday, okay, is not following through today. So keep an eye on that. Brazil starting to break down. Okay, starting to break down. So keep an eye on that. Saudi, the House of Saud. Right, break test go is looking a little better here. It's not following through, but at least it's bounced a little bit. Oil, nothing, right? Um, Bitcoin. Bitcoin is starting to concern me a little bit. I've said that yesterday. I'm going to say that again today. Come on. These things move. Anyway, skip it. It doesn't matter. Ethereum, Litecoin. Okay, big drop. Where? Right to support. Okay. Ripple, breaking down. Breaking down. I don't like these signs. Gold, right? Weakness. Um, I I'm really not liking this because when it starts building that pressure down here at the bottom of the structure, uh, I don't know. I don't like it. Uh, let's skip that. Real estate, okay, big reversal. Commodities, holding up. Palladium, holding. Copper, holding. Base metals, pushing a little higher. Agriculture, high base. Precious metals, that weakness we were talking about just now in gold, okay. Overall commodities breaking out, but not doing a very good job following through. Sugarcane, at the top of the structure. Um, Corn pushing higher. Wheat higher. Testing the previous high, right? We talked about that yesterday and the day before, okay. Steel at resistance. Soybean at resistance. Nat gas we'll skip for now. Dollar. Let's look at the dollar. Okay. It's bouncing back down. It's not doing a very good job pushing through from this structure, right? So you should have seen some kind of a breakout. It didn't happen. Okay. It was denied by the longer term trend line. Now, the other bullish argument one can make is that, you know, it's holding price up against the resistance area of the longer term channel. Okay, let me take these other. Okay, so not doing a very good job breaking down from this structure, not doing a very good job breaking out. We gotta, wait and see. Let the data tell us what's going on. The IMF, special drawing rights, right? It's like a world reserve currency. Not doing a very good job. US dollar, Japanese, yen, pushing a little bit higher. Euro, USD. Okay, here it is. It's building that structure above this structure, which is breaking down from this structure. It's a fucking mess. Anyway, the key point here is that you want this to break to the upside, right? You want this to push higher. Pound, not looking very good. Look for this one to fall, okay? So we'll mark that, all right? Building that pressure at the bottom of the structure. Um, you can say this broke um, here, like this, okay? That's the more valid question, but since it's held for so long, I'll expand it and give it the benefit of the doubt. US dollar, Turkish lira, okay, 791. US dollar ruble broke out, not doing a good job pushing higher. USD CAD broke out, failed, back into structure. Almost. Is it? No. Just, this could be a break test fail, but the overall, uh, and always do this, guys. Don't always look at the bigger picture, right? The overall uh, structure failed to push through. Okay, so it's 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3 down, right? This was supposed to be bearish. It tried to sneak its way out of structure, failed miserably, came right back down, testing the previous high. This is still bearish, clearly. Okay. Australian dollar, okay, just in the middle of nowhere. New Zealand, middle of nowhere. The yuan, dollars falling against the won again. Aggregate bonds are weakening. Okay, so there's not a lot of buying. If this is weakening, then that means interest rates are rising. And let's take a look at the 10-year yield up to 7.3. Broke down from the structure as it should. So that worked out okay. Right, now what? Well, not enough data to make an analysis. It's just in the middle of nowhere. 10 twos, they're okay. Okay, so bank lending is okay. If this were to start to reverse, I would worry. Okay. All right. If this were to start to reverse, as long as it's rising, it's up here. That's fine. For banks, 30-year broke down, popped back up, going sideways. Okay. So remember, when the 10-year bond rises, the interest rate falls. All right. European banks looking weak. They've broken down. No follow through so far. Emerging market currencies, uh, just in a bear flag. In this flag. Is it bearish? No. It's just pausing. All right. XLF popped higher. It broke down, didn't do a very good job. Okay. KBE popped up and above, not doing a good job. But it is a structure above a structure. Okay. We'll identify it real quick. Okay. Now, what's the compass on this one, right? What the overall? What's the compass? The compass is down. Okay. That's the compass right here. Eventually, this will resolve to the downside. So what we're looking at right now is the 1, 2, 3 down. All right. So that's another clue that we're going into tougher times. All right. Um, biotech doing nothing. Water kicking ass, baby. Jets look for more downside. Hotels uh, broke down, doing nothing. No follow through. Hotels versus Jets. Hotels are underperforming. Let's look at Facebook. We had a megaphone structure. It's at the bottom of the bear flag. We're looking for downside. Amazon bounced off the top, pulling back. Apple broke out, came back. I don't know what they're doing with this Apple. Well, we have more colors. We have a better camera. You can edit that camera, those pictures, and make it professional. And give me your $1,200 or whatever it's going to be priced at. I don't know. Netflix broke out, failed, came back. Not a very good job. So now we'll mark this as a double top. All right. And it's just pulling back. Let's see if this has the ability to, you know, make one more up. And if it does do something like this, that's incredibly bullish. All right. If it makes its way back to the all-time highs. Nvidia broken down, weakening. Tesla doing nothing, just going sideways. Um, and that's about it. That's about it. All right, let's talk a little bit about retail sales. Let's see, where do I have that? No, no, no. Okay, so TSA numbers, they came in 950. So that's actually good. Uh, we started hitting, better numbers as of late, which is good for the economy. It's good for the airlines. But we're way, way, way below where we should be. Okay. At this rate of improvement, it's going to take us uh, at least a year, if not 2 years, to recover. Any questions so far? All right. All right. Let's talk about retail sales. This is one of the big four. When you get pent up demand, you're going to see retail sales rise. When you get stimulus, helicopter money, you're going to see retail sales rise. It doesn't mean anything. Okay. Um, like for example, let me see if I can. I don't know how this is showing up on your screen. Let me take a look. Yeah, it's good enough. It's good enough. Okay. So when you see unemployment, it's at 7%, and you're seeing that real income is down 4%, and you see industrial production down 8%, and then you see retail sales, back up. It doesn't mean the economy is doing great. We're not, retail sales are very important. Don't get me wrong. 70% of GDP is consumption. But you have to understand the context of what it's doing. Okay? You remove those stimulus check, the helicopter money. Uh, you allow some time to go by after the lockdown. You're going to see this drop dramatically, the retail sales. Okay? And when you look that people are earning less in wages in real terms, industrial production is not there. It's a smaller part of the economy. It doesn't matter. It's weakening. And you're seeing unemployment is high, right? You're not you're not back to January 2020 levels. Nowhere near. So don't misread the retail sales as, oh, everything is great. Yes, everything is fine. No, that's not the case. All right. Remember that what we're measuring is, and I wish I keep doing this and I don't have my little drawing tool. Um, anyway, when you pump money into the productive economy, okay, there's going to be consumption. Uh, you know, savings are going to rise, right? Because you're scared if you're going to have a job or not. You're going to give those dollars to other people who are going to go out and spend them. It's going to offset a little bit, and you're going to get that pent-up demand. There's going to be some spending because you have to go get a haircut. You have to go, go purchase a car if your car blew up or whatever the case may be. Go buy a washing machine. I don't know, whatever. You're going to get that spike. Once those dollars are spent, they're going to go through household income savings, right? That's when you spend money, you save. You're not saving into profit savings, and then those dollars are going to end up in the stock market. Okay. Ideally, you would prefer that those dollar savings, those profit savings, end up back in the productive economy in the form of investment. And right now, that's not happening. The only investment that is happening is coming from uh, the government. Okay, those stimulus checks, and that's why they're so important. And everybody's freaking out. They want to bamboozle you that everything is fine. We're going back to normalcy. Fantasies. It's not going to happen. All right. So let's take a look at the Nasdaq again. Okay. We're waiting for this structure to break down. Right now, it's not doing a very good job. It's just kind of hanging in there in the middle of nowhere. It's been doing so since 1:30. All right. So that's about it. Any questions, guys? Anything you want to ask? All right. So we talked about retail sales. Industrial production is weakening. Consumer sentiment a little bit better. Don't look at these Q3 GDP forecasts too much. Okay. Um, just even when they come out, they're revised later. So I mean, it's important, but the forecast stuff, it's been really off, especially that Fed one. It's just all over the place. Uh, the weekly leading indicator, which is not as powerful, okay, is still in contraction mode, okay. All right, 1 second. I gotta take care of my dog. 1 second. Look at this video while you.
Mic off. Mic on.
uh, Amazing, huh? She managed not to get her hair wet, which is impressive, until the end. Till she was saved, and then right back in. All right. So, yep, retails were the big thing for today. Um, any other updates? Let's see what the deficit is for today. Where's 3C? Did I pass it? Yeah, there it is. 27.33. So the deficit hasn't really been rising as of late. Okay, it's kind of stuck at that $27 trillion. Corporate profits, no update. Earnings yield, let me refresh this. 2.83%. I'm dying for this one to update because it's from August and we're in October now. I want to see what the broad money supply growth is. Where are we? Yeah, still August. Still August. Let's take a look at the last 5 days. Where's money flowing? Industrials, consumer services, communication services, information technology. What's lagging? Real estate, energy, and financials. How about today? Healthcare, utilities, industrials, materials. Yeah, so you see, right? That's what we are talking about before. That if you're seeing that the equal weighted ETF is rising, and then we have the market leaders falling, right? There's a redistribution of the money in other asset classes, industries. Okay, all right. It's stuck there, little baby head and shoulders, right? Little baby one. We're not interested in these kind of trades. We're interested in the other one, right? We're interested in this one. That's where the bias is, to the downside. All right. Should we go through what is 252? Let's do it. Why not? All right, let's just go take a look at a few companies individually. Okay. Let's see what they're doing, just out of curiosity. And let's start with the airlines, and then we'll just work our way through. Delta Airlines. I'll do the chart analysis. I think this will help you. Okay. And again, this is not in-depth analysis. Okay. I haven't read their Q2 and 3 and whatever. We're just going to go on a purely charting standpoint. Okay. American Airlines, very noisy. this out. Okay, that's the setup. Southwest. Southwest is the best of the best. They got a lot of cash. Okay, Alaska Airlines. JetBlue. JetBlue has money till the summer. Okay, without government help. So that tells you a lot. Spirit not doing as well as JetBlue, obviously. Okay. Allegiant. Allegiant is a, you know, it's an okay company. They still have a lot of growth ahead of them. Okay. But they got a base in Vegas, and Vegas not doing very well. So we'll see how they manage it. Copa. Fuck this. I hate this airline. I'm sure the people that work there are great, but as a company, it's way overvalued. EasyJet continues to weaken. Okay. Continues to weaken. I'm very surprised at this. China Eastern Airlines. Okay. Nothing there. Nothing there. Whoops. Where is it? There it is. American Tower. Okay. My favorite. Ooh, my all-time greatest stock, Everest. Doing really good. Really good. This is also a real estate play. Yeah? It's not just hospice and so forth. Beast. Boeing. Okay, they got problems, but Airbus apparently is doing worse. Alibaba kicking ass all over the place. Okay. Avis looks like shit. Caterpillar breaking out, doing really good. Okay. Chipotle Grill. This is going to really just continue to push higher. It's kind of like a Domino's kind of deal, right? They had that food poisoning thing, and I loved this stock as a long, I guess 3 years ago or something. Where is the? But I had other things in my portfolio I didn't own. It dropped like 68%. It was like, oh, it's over. They're gonna shut down. You know, it's poorly managed. Blah blah blah. Yeah, okay. Tell me about it now. Okay. Any these kind of fast food joints are gonna do well in this pandemic. DDD Big Bounce. I used to have this as a long-term play. I kind of left it because of the structure was breaking and I didn't like it. If it should ever come as low as $1.26, I would be interested. Dunkin' Donuts, great, great buy this thing. Um, it's Dunkin' Donuts. These are the same thing. Domino's, McDonald's, these things, you gotta buy them if you like them. Okay, there's Domino's. Bull flag. This is gonna push higher. Okay. Diana shipping. Oh, my love. Waiting for this one to pop out. Okay, it's gonna be a while. You need commodities to go up. General Dynamics. It's falling apart as a structure. Okay, it's got some issues. GE bounced off the previous low here. All right, it's a very complex company. Don't touch it. Um, Hasbro, eh. Hershey. I'm surprised this has not broken out. I think this will continue higher. This is again, it's chocolate, man. Come on. Comfort food. Hertz. Remember Hertz, right? Went bankrupt. Stock soared and soaring again. $2.61. Stay away from this shit. Intuitive Surgical. This is one of these bull stocks that are just gonna go up until the day you die. Johnson and Johnson. Look for a push higher on this one. defensive. Lockheed Martin, middle of nowhere. Again, it's a war machine. Over the course of time, that will go up. MasterCard will go up forever. Uh, Northrop Grumman, okay, might get a little bit of a pullback. This might drop a little bit and then take off. On a drop, that would be very interesting. Procter and Gamble, of course, defensive baby. That's gonna go higher. Sherman Williams, you know, higher. Uh, Sakos Energy, one of my favorites, long term though, long term, but it's okay. Let it do what it's got to do. Tata Motors. This goes with India. Is this going to be the bottom? I don't know. I don't know. Um, on a break, I think it will be okay. But you know, car sales is not the place to be. And Travel Zoo, yeah, I'm surprised it bounced as much as it has. Yes, Virgin Galactic. To the moon. Yes, this is what we worry about. Okay. Breakout. Take it. Comes back into structure. Get out if you like it. Under Armour breaking to the upside. Right. Nike was kicking ass all over the place. Under Armour is just riding its coattails. United Healthcare. I have an executive order to lower drugs, and I'm going to do this, and I'm going to do that. Yeah, how's that going, Mr. Trump? Pushing higher, should continue higher. UPS, air cargo is very hot right now. Very, very hot. Forget about these guys. Uh, this is the Chinese fangs, the best of the best technology of China. Of course, it's going to go higher. Chinese company going to go higher. Baidu going to go higher. And yeah. All right. So if we were to take BE, GE, Boeing, and IBM and make it into an index, this is what it would look like. Okay. Um, Not very bullish, is it? And that's another thing that misleads people in terms of their 401ks. That they look at the index and they're like, oh, the index is going up, but I'm underperforming. Yes, everybody's underperforming. Index, unless you are literally buying the index, if you're picking stocks, um, you're not going to outperform the indexes. Okay. So, again, best in a 401k just to not do a whole hell of a lot. Okay. Because there's a lot of risk. There's a lot of risk. Okay. If you're sitting here trying to pick bottoms here, trying to deal with something like this is not where you make money in 401ks. And I'll say this again and again and again and again. This is when you make money in 401ks. When everything is boring, when they talk about the stock market on occasion. Okay, that's it. This is where you make your money. If you're trying to, make all your money in these kind of moves like this, you're wasting your time. You're wasting your time because when the M pattern comes, okay, and you start seeing the move back down, okay, what did you miss out? Nothing. You missed out nothing. You can buy here when everybody's all bearish. You didn't miss out anything. So you just gotta be patient. Gotta be patient. And I love to buy the dippers. Yeah, I told you buy the dip. Yeah, did you sell? No, but buy the. Yeah, well, you can't buy it unless you sell. You gotta sell first. You gotta raise cash. Habibi, what are you doing? You're talking nonsense. You know. All right. Let's go back to our little time frame. Broke out, failed. All right. So how good of a job is it doing? Not very. Not very good. Not very. All right, 1 hour left in the trading session. Any questions? Anybody? I'll be right back.
Mic off. Mic on.
Okay, so Alessandra says if this drop is ever going to happen with them printing money, remember there's many different components in the market. Um, they can't print forever. There's a law of diminishing returns. There's a point where you need more and more and more deficits to um, to have the same amount of impact, right? So it's the argument that I've always had with MMT. You can't print value for a currency. Can't do it. So we printed 25% of GDP, and we're gonna do what? Print another 25, and then another 25, right? You gotta you gotta think along basic logic some point, right? Sentiment. Uh, we're getting into the fatigue stage of the virus. This is where reality hits. People are sick and fucking tired of lockdowns, of restrictions, of wearing masks, of not being able to do what they want to do, not having a job. Savings are dwindling away because somebody that has middle upper family, they lost their job. Their $600 paycheck is not going to save them. Right? They got their BMWs, their pool in the back, their garden, their you know. This is the problem that a lot of the people that say no, everything is fine. Yeah, we're pumping, we're going back up. Yes, yes, yes. Yeah, but that's not reality. It's not reality. It's not going away. And I'm going to say it again. I'll go go out on the limb and say these vaccines. I don't know. I don't know. They sound good. They sound great, but until I see it and you know being injected in people, sufficient amount of people, not just a person, I'm not going to trust it. You know, I'm not going to trust it. I want to start seeing the numbers go down. I want to see people going out and getting the vaccine. So, how many more trillions can they pump? Think about it. I'm having a discussion on Twitter with someone who's like, "Oh, you don't understand MMT." I'm like, "Oh, here we go." Yeah, well, you don't understand it. It doesn't matter how much deficits we have. Yeah, okay. Okay. If the government sits here and gives money to the people, that's going to create consumption, and consumption is going to create production. See? Works. Perfect. Yeah. That's what they said about trickle down economics. Just give the money to the rich, they'll go out and invest it. They know how to invest it, they know how to do it, and we'll all be rich. How did that work? How did that work? How is buying back junk bonds working today? How is QE working? They gave him back the cash. Fed bought the bonds. Where's all the investment? If 25% deficit to GDP is not going to create economic growth, then I don't know what to tell you. I mean, if you can't figure that out, that it's not doing it, I don't know what to tell you. You can't pay people to sit on their fucking couches and expect that the economy will grow, right? The Soviet Union tried that. Didn't work. You pretend to pay us, we pretend to work. I'm not saying that we shouldn't give money to the people right now. That's not what I'm saying. We should, absolutely. It's an automatic economic stabilizer. But when you're giving 48 billion to the common folk, and then you're taking that other 3.7 trillion dollars and buying junk bonds and QE and all this bullshit, where's the benefit in that? Where is the benefit of that? I don't see it. Anyway, so it's coming back down again, right? It's 314 in the market. This failed miserably, right? Didn't do a very good job. What's it trying to do? How good of a job is it trying to do? How good of a job is it doing? So we're right back into this building pressure at the bottom of the structure, which should resolve to the downside. Okay? Should, not must. Um, Another point I want to make real quick. Remember how I was saying, let me go out a little bit. Remember how I was saying that it would be very awkward to see price come down like this, right? It wouldn't look very natural, right? The market's got to be ready to go down. This would not be natural to go straight down, right? And sure enough, right? You got the drop, you got the pop, and now you're getting the next drop, right? This looks more like it's ready to go down, not when it was going straight up. Okay, just keep that in mind. If it looks funky, then you're just not seeing whatever you're not seeing. Any more questions?
Mic off. Mic on.
All right. Oops, 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 oops. I moved the line. I moved the line. Red alert. Red alert. What did I do? Fucking lines. I wish you could just lock them into place and they would just stay there. I can't tell you how many times I've done something like this or it moved and I'm looking at it at a short time frame and I take a trade and it screws me. Be really, really careful with that, guys. Really careful. That's why often I have multiple charts out. Um, when I'm doing what I'm doing. Okay. Let's go down to a minute. Take a look at the S&P. 36 minutes left in the trading day. I feel like I should start singing or something. See it? See that? Come on, baby. Fall. Get it over with. Boring me. Like watching paint dry, huh? Anything new on the timeline of the Fed? Let's see. No, nothing. But it's again it's amazing how the Fed stopped QEing, right? The balance sheet stayed at that 7 trillion mark. Deficits have remained what 27 trillion, and the market is doing nothing. But it's not liquidity. Nope, not at all. Fools. All right, 30 minutes left.
Mic off. Mic on.
Slow grind. Going to sleep. Something to think about since we're talking about deficits and everything. How did the U.S. trade deal thing work out for China? Yes, we're bringing jobs back to America, making America great again. We're importing more than ever before. What happens when you import, right? You're creating jobs for somebody else. Um, that's a drainage of dollars in the productive economy, no? And I haven't done the video about exports. I've talked about it a little bit, but remember, when money is pumped into the productive economy, right? If you're importing goods and services, you're exporting dollars to the rest of the world, right? So that creates a drain. That creates a drain in the overall economy of dollars. So if you're at record levels of imports, thanks to trade wars that was supposed to bring jobs back to America, right? And you're exporting those dollars to the rest of the world. Well, you're creating jobs for everybody else with that $67 billion. So, you know, another reason why you're not going to get inflation when you're importing, uh, in terms of price, right? Because those dollars are going to leave the United States. They're going to go bye bye. Now they'll come back as investments, right? They can buy U.S. companies and wherever those dollars end up. Yeah, they can come back as investment in asset classes, right? Commodities, real estate, bonds, whatever. But all that hype, man, and I was like, no, this is bullshit. No, this. I kept saying it for months. This is bull. This is not. No. And everybody's like, no, it's trade wars. Come on. What happened in trade wars? Worse than ever. Worse than ever. And the algos kept pumping in that fucking, you know, stock market up and pumping it and pumping it and pumping it. And everybody's like, yeah, trade wars, Trump, fuck China. Yeah, okay, where are they now? Where are they now? Macro calls do not pan out tomorrow or next week or next month. They don't, and macro is very, very slow, right? It's like a shipwreck, right? Just slowly. Anyway, continues to push lower. It's not doing a very good job thus far, right? Big drop for sure, but it's grindy, and it's 24 minutes left in the trading session. The compass for this move, this particular move, right? What's the compass? The compass is this on this structure here, right? And again, even though it's a minute chart, doesn't matter. Same thing applies. 1, 2, 3 up. This is the compass right here. Okay. Should resolve to the downside. It broke a little bit below. It's bouncing a little bit higher. It's kind of grindy, right? What's it trying to do, and how good of a job is it at doing what it's trying to do, right? Again, as I used to tell people, if I can't show it to you in the chart and you can't verify it on your own, then it's garbage. It's garbage, right? It doesn't matter what time frame I show you. The way markets typically move, not always, right, is in waves, in structures. It's about risk reward. Just looking at the Dow Jones, right? Broke the previous low and pattern, right? Um, Nasdaq is doing it as we speak. Not very convincingly, but it is. Same thing with S&P. It's at previous lows now. Nasdaq, breaking down. Small caps pushing lower. The fangs, while the rest of the market is more or less flat, the fangs are down 0.5% and they're pushing lower. Transportation has been leading the way lower. That broke down, right? We just drew this little bear flag, right? And ultimately it broke. Um, yep. So remember, just let the data tell you what's going on. Read the message of the market. Go through the indexes, see what's going on, chart it out, see if it's valid, see which way the market, the structure is pointing, right? See what the setup looks like, and pick a good risk rewards, right? It's simple. It's simple, but you got to practice. Doing it dynamically is not as easy as I'm making it seem. I understand that. Right, here's the DAX. Right, megaphone. Right, there it goes. Right, doing a little bit of a better job, but you need to see that follow through. Okay, again, the point of teaching bare knuckle charting live, small time frames, is so you can apply this eventually on bigger time frames. Also, that when I make a video, you guys can understand how I view the market and why I view the market, and we can speak the same language. I understand that this is not the way people understand markets. They have the RSI is exceeding the 70% line, and the MACD is doing the opposite. But look at the moving average and the uh, cringy because I used to believe in that shit. I used to try so hard, and I was such a failure. I was like, eventually, I'm like, this cannot be the way it is. This is wrong. And you spend enough time doing anything, you'll eventually figure it out, right? Eventually, you'll figure it out. Let's take a look at the volume for today. Where's 9:30? There it is. 9:30. All right. So the point of control is at 11,950. We are below 70% of all trades for today. Um, this pop in here, not a lot of volume, right? There was no follow through. That's why it failed miserably. Um, and now we're pushing to the downside. So, yeah. Makes sense, right? And do you really need the volume to figure out that this is a consolidation here? It's a bear flag. Not really, but if it helps you think about it in a different way, then that's good. But retail sales were better than expected. Beat Logan's Mohtashamti's or whatever the fuck his name is expectations. They always do. Even his own analysis. Okay, how you doing, Frank? Frankie, Frankie from South Philly. The stock market is socially useless. Can't wait to. Yeah, well, I don't, I don't know. Stock market is definitely convincing people that Trump is a job creator and everything is fine. No? Yeah. All right, 14 minutes left in the trading session. If we measure from the bottom, the volume, okay, we're in this void here, right? There's a little void there. Trying to hold above it. If that void goes, then the next likely area would be somewhere here, right? And again, if and when it does, you got to take profits, right? You can't hold on to it too long. This is the bottom right there. All right. See how slow and grindy and puts people to sleep, but the price movement is, you know, sufficient for the day to, you know, inflict some damage, right? Getting back to Frank, yeah, yeah, I mean, commodities, everything is auto. There's a lot of automation, but they use the stock market to, they've used this whole pandemic to enrich themselves. I don't want to sound too much like a, you know, socialist, but it's true, right? It's not like those dollars went to the common folk. Backstopping risk for junk bonds? Like, you fucking kidding me, dude? Like, you serious? I can understand treasuries, right? You want to lower interest rates, you want people to refinance, you want people to borrow. Okay, whatever. I kind of get that. But you're buying back junk bonds? Oh, fuck out of here. Oh, repos are not QE. Remember that? Oh, there it goes. See it? Look at that baby. Look at that drop. Boom. Right through the void. Yeah, repos. No, everything's fine. Economy's fine. Everything's fine. Yep. Repos are not QE. They're just short term. We just need to increase the size of it. And then increase it some more. And then more. Oh, QE is here. But when I and some others were saying it, oh no, oh Nick, you're negative. Oh, you're just making things up. Oh, you used to be an MMTer. That's not what you used to say. Yeah, well, you guys forget, not you, but the people that criticize. It's like you forget what I was saying. Trade wars. Oh, come on. Yeah, okay. That's the problem with macro. It's not gonna happen tomorrow. You gotta buy Bitcoin. It's going to $200,000. Yeah, okay. All right. Good. So there it goes. Um, it moves, so I have to readjust it. There it goes. To the next point of control. All right. If you can't make a little bit of chunk of change out of this one, I don't know. Do you want me to come over? Send me your address. I'll push the button for you. 8 minutes left to go. All right. So you should be taking profits as it comes into this area here. Okay. All right. And there's always the rule. Don't forget. Don't be a dick for a tick. Don't try to squeeze every last penny out of it. Gradually, then suddenly. Right? Have you noticed what happened to that gap? Rewind the video and see what this gap used to look like and what it looks like now. See how the volume is starting to fill, right? The closer we get to the next point of control. Right? There it is. Start taking profits. Don't be a dick for a tick. Don't be a pig. Magic, huh? Magic. Just for the record, that was a 1.5% move from 130, I think it was. Oh, I'm sorry, from 1030. From, what is that, 2 o'clock? We got 1% move. 1% is huge. You get half of a percent, it's huge for the day. CFDs. That's it. But it's a minute chart. It's a minute chart. No one can analyze the minute chart. All right. We'll come back to this. Um, we're still about 0.9%, about a percent from touching the bigger structure, right? Which is, let me take these things off, which is down here. Okay. And, come Monday, we'll probably test it. And it looks really nice because it coincides with the previous low. Okay. So the bias for Monday is lower. It doesn't have to go in a straight shot. Oops, I hate when it does this. Doesn't have to go in a straight shot. But the burden of proof for the bulls will be now this trend line. All right. Got to get above that in order to start thinking about a bullish move back up. Right. All right. Minute left to go. So again, we got the move up last week. We got the head and shoulders. We got the drop. We got the secondary drop. We got the bottom of this wave here. We got the bigger move up. We got this little move down, right? So overall, very happy with you know uh, the analysis for the past 2 weeks. Everything's working fairly good. Obviously, this was a particle market. I said don't short this. Don't think it's too high. Don't think wait, right? Wait for it. Wait. Let it give you a structure. Let it give you something that you can sink your teeth into. And it gave us a head and shoulders. And We said wait for this. Uh, it would look very awkward if it just dumped, right? It wouldn't look right, and that was true. We got this falling wedgie looking pattern, right? Then we got the bear flag, the wave two. Now we're in a wave three down, right? And we have our target of this previous support area going into next week. Uh, we also know when to be bullish, right? Which is it has to get above this falling trend line, okay? And then we'll reassess everything, see what structure it gives us. As the market close, all right. So I hope you guys are starting to, you know, pick up on the way I do things. Um, Again, it has nothing to do based on my feelings. Forget about my feelings; they're useless. Um, Let the data tell you what's going on. Read the message of the market, not just in the U.S. or wherever you're trading from. Look at the whole entire world. See how it's shaping up. See what it's telling you. Look at the market leaders. Look at the underlying um, industries that are pushing up, or sectors, whatever you want to call them, are pushing up the market. Is it the leaders? Is it the defensive stocks, right? These things make a difference. Quickly, we'll just kind of look at where is it? For today, let's refresh this. All right, S&P is up 0.29%, led by healthcare, utilities, industrials, and materials, not the market leaders. Energy was the worst. Consumer discretionary was second worst. Okay, that's not bullish. Uh, for the 5 days, the market was up half of a percent, a little more, zero point 0.6. Led by industrials, communications, information technology was up 1%. And again, energy and real estate sucked, and financials. So very mixed message. Okay, it's not very bullish. I wouldn't call that bullish. All right, ladies and gentlemen, thank you very, very much for coming down, hanging out with me for the last 2 hours of the trading. Don't forget Real Macro Economics and Investing, patreon.com/Real Macro. Come down, subscribe. All right, and I can mentor you guys through this wild, almost impossible market and economy. The theme now, again, for me, is on a macro standpoint of the economy is going to be fatigue, fatigue, fatigue. Fatigue is setting in. Cases are rising. Europe is looking really bad in terms of cases. U.S. is going to follow. I forgot to show you this. I think I should. Positivity rate is rising. Where is it? Where is it? What is it? What is it? Shit. Well, it's rising, but that's not what I wanted to show. Anyway, um, we're going to see how this is going to work out, okay? Because we still have that stimulus of that two whatever $1 trillion is going to come in. Surely that's going to give a pop to the market at some point. Are we going to get it? We're not going to get it. About mid-August, I said I don't think the Democrats are going to give Trump what he wants. Uh, they're just going to delay it and delay it and delay it. It's not in their benefit to do so. Um, that's what it appears to be happening. Um, the political landscape is fucked up in the United States. Um, we'll see how this is going to work out. I don't think Trump is going to win. Uh, I don't think he's going to leave office. I think social unrest is going to come back. Okay, the silent majority. Yes, they're silent because they don't exist. People that don't exist typically tend to be silent. Um, so, now we're going to have people arguing this doesn't work, lockdowns don't work, masks don't work. It's going to get worse now because people are fatigued. Okay, they're going to be losing their savings, their businesses. Uh, it's going to start draining on them. The fatigue of not being able to do what you want to do, to go back to normal. They got to blame somebody. It's definitely going to be government. Definitely going to be the scientists, right? Uh, it's going to be a shit show, believe me. It's going to be a flu season is coming in. I'm sure at some point they're going to say they're marking COVID cases because it's the flu and it's not really the COVID, it's the flu. And oh, I can see the arguments now. I can see them now. And yeah, I don't know. I don't know. So we continued lower to 11,823. So we're really close to the to, to that support area in after hours, right? zero point 0.6 now. zero point 0.6. So the market dropped another 0.3% in after hours. Um, Again, I hope you guys are starting to pick up on this waves and structures and how I view the markets. Thank you again. Take care. Like, subscribe. I guess I'm supposed to say that. Sayonara. Bye bye.